Hi, everybody. This is Dan Sheridan, Sunday, October 13th. And I'm going to talk to you for a few minutes on why calendars have been the best performing strategy, at least that we've been doing the last 2 to 3 weeks. And SPX has been 58.15. We've been extremely range bound. And you could see the SPX here over the last couple of weeks or so, very range bound, even 3 weeks back. But usually if we're near the highs and we're range bound, you'd think, VIX is probably 12, 13, 14. No, we're at VIX 20.46. So we have an unusual, as Tom Jones would say, an unusual phenomenon going right now. We have high VIX. So the best performing strategies, at least from the range bound, have been the long Vega type trades, specifically calendars and double calendars, anywhere from 4 to 18 days out. You say, why? Just because, so why has the VIX been up? Well, depending on what percentage you want to put to it, there's two culprits: the election and Israel's upcoming retaliation. You could say, well, I think it's 80% the election and 20% Israel, when they're going to retaliate. Or you could say, I think it's 50-50 or whatever it is. The election's coming up November 5th, 3.5 weeks. Israel hasn't retaliated yet, but that's keeping the VIX up pretty good, right? In a very range bound near the highs, and we have a high volatility. So how do you take advantage of it? And the most effective thing we've been doing is calendars. And here would be an example, at least how I've been doing calendars and how we've been doing them in our community at Sheridan Risk Management. Give you an example. We closed at 58.15. So something I'm going to be looking at upcoming Monday and Tuesday is putting a calendar on about 20 to 30 points under the market. Why, Dan? Why would you be doing that? And I'm looking at, maybe you can go OC 25. Let's go even a little bit further. If we go, maybe here's OC, here's November 1st. November 1st, if we sell November 1st, and just an idea, you can buy November 6th. So 5 days between the long and the short. I'm looking at puts here, and I'd probably go at least 25 points under the market. So we were Monday at 58.15. I might go to 57.90. And you can look here. I think these are just weekend deltas, but the delta is going to be pretty close to neutral. You have a little bit of head start to the downside. So if we closed at 58.15, and I would put our strike at 57.90. So on the downside, you could handle almost a 100-point move because you have a head start. You're starting a little bit lower. We're at the highs. We're near the highs. And this has been working real well for many reasons. But part of it is the vols have stayed up. So you get wider break evens on the calendars. For those of you who may not know what a calendar is a mixed month spread at the same strike. So here I'm selling November 1, buying November 6. The strike is 57.90, and I happen to use puts. Again, it's not $20. This would be about $4. This is simply, sometimes the prices are off on weekends. They just don't have it all updated, but it's usually about $4 or $5 for that. But that's the type of trade that has been working well. Next week, there's nothing major news going on next week. Monday's Columbus Day, bond market's closed. Thursday's initial jobless claims. But I'm trying to set up my range bound trades right now. A little bit more room on the downside since we're near the the all-time highs. We're also talking in the community this week a little bit about for people who have a long portfolio, covered rights, cash secured puts, et cetera, I think it's a good opportunity. You get a little more premium or volatilities with the higher VIX. In most cases, I'd rather sell calls than buy puts for downside protection, especially if I'm doing something like in SPY, and many reasons for that. But if you'd like to come in a month and participate in our daily activity and get alerts on all the live trades, send me an email, Dan at Sheridan Risk Management, or you could sign up for a month of the subscription. Love to have you. Have a great week trading, and I will see you later. Thanks.